everyone. Welcome back to Market Talk Monday on a Thursday. So this is just Market Talk. We had a busy week this week. We had some folks out sick, so Isaiah and I pushed to Thursday of this week, which was kind of good for us because we've got a little bit more to talk about other than just a repeat button of here we go with the S&P talk again, and it's hitting another all-time high. Mm-hmm. You're going to share some good news with that today, though. Specifically 29%, I think, of the companies have reported, and it's good news.
Yeah.
There's really not a
I got my little cheat sheet in front of me.
Yeah.
With all the.
Yeah. So let's dig into it.
Yeah. So 29% of the S&P 500 companies have reported their earnings so far. 87 beat their EPS, so earnings per share estimates, and about 83 of those out of the 29 that have reported have beat 83% beat on revenue, with earnings being up 9.2% and revenue up 7% year over year. Another 175 companies. So he's talked. This was released Sunday. So 175 companies. I think some have already. Some of these 175 have already released their reports this week. But in total, 175 companies are still to report throughout this week. And then the markets rallied.
Yeah.
S&P's up 1.9%, Dow's up 2.2%, NASDAQ up 2.3%, and then the small caps are right behind them with the Russell 2000 at 2.5%. And then the yield curve, it definitely flattened with the 2-year being at 3.48% and the 10-year at 4%. And then, of course, working our way down through the sheet, oil surged 7.6% to 61.47. So $61.47 a barrel after new sanctions on Russia energy firms. And then now that we're seeing rates cut, so Fed Powell cut rates yesterday, another 25 basis points.
Yep.
We saw that. And then especially after the good talks Trump had with President Xi.
Which are continuing through this morning.
Continuing, but both parties have said the talks have gone extremely well. Our tariffs have gone down 10% on China. They were at 57. Now they're down to 47. But you'll see that through gold and copper, they've actually slipped. They're down from their all-time highs because of all the rhetoric between Trump.
Gold's off about $75, I think.
Mm-hmm. Well, it was down. So it's 41.37 was the high, and now it's down to 39 something. Okay. So it's slipped a bit. And then Bitcoin. Last week rose another 5% to 113,500 a coin. And then on the macro front, CPI came in softer than expected. It was up about 0.3% and core up about 2%, reinforcing the bets on so when he released this on Sunday, it was reinforcing that there was going to be a 25-point cut, which we've already seen this week. So this morning, markets opened a little down. Microsoft was off a little bit, so that's why we see the indices down a little bit this morning. But
yeah, right now only the Dow's up almost a half point. Everything else is down, from the NASDAQ being down almost 1%. S&P's off 0.25.
But I still think that, in my professional opinion, the indices are going to finish high this year. I think they'll finish positive.
So you're calling for the year to end strong.
Mm-hmm.
And so stay the course?
Yeah, stay the course for the remainder of the year.
Now, in some of the portfolios, you pulled back a little bit off the table in that unconstrained portfolio, excuse me. But mainly in Roth and
qualified
traditional
accounts,
IRA accounts, to not trigger taxable events. What was your thinking there?
So my thinking there was, you have no idea where the rhetoric's going to go with China. Now we have more of a playing field that we can go off of.
Yeah.
Especially with tariffs dropping, that's a good news, in my opinion, for the NASDAQ. 90% of the world's rare earths come from China.
Right.
And that's super important to the tech company, magnets and all sorts of different things that they use in all their technology.
Chips,
and chips and everything that they use. And I think that's a good thing for the tech sector, that China and the U.S. are still talking and having good conversations. And another thing to add to it is South Korea. I almost said North Korea. North Korea is definitely not. South Korea. I don't even think North Korea has the budget to do this, but South Korea is investing about 600 billion, if I'm not mistaken. Let me look it up so my numbers aren't off. South Korea.
And into the U.S.,
Hmm.
bringing money into the U.S.
Yep. So they're bringing money into the U.S. Let me pull it up so I don't get it off.
Well, 600 billion, I shouldn't say necessarily money, but bringing manufacturing goods
And they're
to the
gonna.
U.S.
Trump is gonna allow South Korea to build instead of using a diesel-powered submarine, he's gonna allow them to build a nuclear-powered submarine. And that is
Which
being,
might be right here in Hampton Roads, maybe. I mean,
it's going to be built inside the U.S. and given to South Korea. So they're
Yeah.
going to use their South Korea funding to build it, which again is bringing a little bit of jobs, bringing some money into our economy. So I think that's a great play, and it's more money being flooded into our markets.
that's all good news. I'm going to be the devil's advocate here, play negative Nancy. Market's at an all-time high. We've been preaching this message since 2009 with the comeback of the equities market from the housing crisis of 2008.
Mm-hmm.
And Isaiah, we have been on a bull run now for going into almost 18 years. So the thought here is, when is this going to correct?
Yeah, that's
When
the
is the
magic question.
market going to take a tumble?
That's the magic question. If I had a crystal ball, I'd know, but I don't. And if I had that crystal ball, I think our clients would be super happy because I'd be putting a lot of inverse plays in their portfolios. But we just don't have that crystal ball.
I'm reading a book right now, 1929. I would encourage you guys to educate yourself. Go read opinions on both sides, I would say, in order to form your own. Hear what everyone's saying. And Andrew Sorkin has written a book called 1929. I'm in about the first quarter of the book now, and it's really just given the history of what happened in the banking channels in the early 1900s that led to the Great Depression and led to the stock market demise that has been the downfall of all markets historically, where the Dow lost almost 80% of its value in under 5 years because of things that happened in the banking and regulatory world. Now, most of that has been tightened up over the last 100 years, but there's a lot of tea leaf readers, who are calling for a similar correction and depression, recession.
And it's super funny to me because even the talks I've had with just friends in my friend group, they really ask me, like, I don't see how it could ever fall. And what's funny is you told me the other day, and I hadn't told you this yet, but you told me the other day when you were at Velocity Capital, a lot of the rhetoric was, how is this going to correct?
Yeah.
What's going on here? How is it can't fall?
Yeah.
And it's the same thing where people mistakenly are saying, oh, this is not going to correct. It's going to continue to go up.
Yeah.
It's just not true. It's not the case. That's not ever been true where it just continues to go up without any sort of correction.
Look, we're cheerleading it. We want to see it happen. I'm not hoping for a correction or recession. Certainly not a depression.
Mm-hmm.
That would be horrible for our country, for our economy, for our citizens. But I think you have to use some resolve, and you have to wear restraint on your investment portfolio.
Mm-hmm.
Meaning, restraint would be AKA, think about diversification. Think about using uncorrelated assets to the market, whether it be from home equity to cash values and life insurance to fixed index annuities. Those are great non-correlated investments that you can still get some yield from, still get some return. Home equity being appreciation. And if you piggyback things like with home equity lines of credit, the consideration of using even reverse mortgages in your retirement distribution phase. I know I said it, and people are going to be like, oh, my God, Kenny said reverse mortgage. There are times where those products, specifically when we have a downslide or downturn in the market, that those could be valuable. So it's having these products properly financially engineered in your individual financial process
Yep.
of wealth creation and wealth distribution.
Well, and that's kind of hinting towards next month. We're doing a show for Beyond Wall Street called Zero's the Hero, where everybody here is like, "Oh, you're crazy, zero." Like, what do you mean zero? I don't want my
How
money.
can
earning,
zero be good for me?
Yeah, I don't want my money earning nothing. And when you look at that, it comes back to when I hear zeros the heroes that when you're in the market, selling and reducing risk is not always the answer. So when you have a hyper pullback and you're selling and reducing all this risk, and then you go put it in a short term bucket where it's earning 1% or 2%, you can't let those assets hit the recovery.
Yeah.
So when we're talking about zero's the hero, it's using, like you said, an uncorrelated or non-correlated asset to the market, to where you have a sum of money where you can go and pull income off of, you can take a distribution from it without it having the same volatility, but maybe even have some upside swing, not the full upside, but a little bit of an upside swing, using actuarial science, which is insurance products. And this gives you kind of a hedge against market volatility, that when your equity portfolio is down, you can leave it, and then you can actually take it from the non-correlated bucket, buy stocks at lows when they're on sale, and then ride it back up and let it recover. Because when you look at a client losing 50% of their portfolio, it takes 100% to get back to even.
Yeah.
So when you're selling and reducing risk, and you go put it in a guaranteed fixed bucket at 3, how long is it going to take you to get that 100%?
Right. The thing to remember, folks, and I know we will sound like a broken record to those of you that are listening that are clients, but investments is the acceptance of all risk. So you can't have everything completely exposed to equities. That would be, in our world, that'd be like almost malpractice, if not malpractice. So having everything exposed to equities, you would seem like right now that would be the most wonderful place to be. Why wouldn't I have all of my money there? Because I can't tell you, and I can't accurately predict, nor can you, nor can Levitt or anybody at Foundations accurately predict when the market's going to change, when it's going to go down. Therefore, we use diversification to offset those risks. We use rebalancing to offset those risks. And when you're properly managing an investment portfolio, Isaiah, along with the insurance strategies, which is the transfer of risk, bringing those two together, actuarial science, transfer of risk, to the acceptance of risk, the investment market, using them both is a great overall strategy. And we hope that you do that. We hope that you find value in these little market talks.
Yeah, absolutely. And just remember that the equities portfolio and equities, it's a lot of people treat it with emotion, and that's when you can get in trouble.
Yeah.
It's having a bunch of emotion behind, I don't want to miss out on this. I want all of my money to be exposed. And using your emotions to make a financial decision could be bad.
Yep. Lead with logic, resolve, and enjoy with emotion, right? And that emotion sometimes is going to be on both sides of the spectrum. But allow your decision-making to be logical and verified by emotion versus verifying with emotion and then trying to make the logic fit your emotion.
I mean, that's part of our job, is being not only a professional and having an understanding of how markets work, but also a behavioral coach.
That's right. Well, I got to jump into a podcast, Isaiah. We've got a great friend of the company and a personal friend of mine that I'll be interviewing today, Mr. Nathaniel Pierce of Pierce Jewett, who is our firm's legal counsel, one of the wisest attorneys that I've known for years, been with me a long time, giving me sage legal advice. And so I'm going to have him on the show, and that will be released. Cody, when are we releasing that?
Next Friday.
Next Friday. So stay tuned to KP's Black Box. We'll have Nathaniel Pierce. We just released a podcast that was with Luke Meacham, right?
Yep, that was 2 Fridays ago.
2 Fridays, yeah.
IUL podcast went out.
Yeah, if you want to learn about Index Universal Life and the pitfalls, the good, the bad, the ugly, watch that podcast. As always, smash that like button, subscribe to our podcast, and continue to follow and tell your friends and family about all the content we're putting out. We'd really appreciate your help. Thank you so much, guys. We love you, and we appreciate you all. Have a great day.